Hi, this is Saturday the 14th of March and we've had a crazy week again. 2500 last week. When was it? When did I record? On the 9th. Yeah, we were right at the open. Market was halted down and market dipped as expected low and followed by a bounce on the 10th. It went back up to 2900 as expected. Please have a look at the last video just to confirm. And then it resumed down 2500 broke. It took a few more bars to then go back to the next level, which was expected around 2500. Volatility went sky high and the 2500 also got penetrated pretty deep. It's still holding and it went to about 2400 overnight. By the way, this is a CFD that mimics the future, so it gives us a better picture than the straight SPX symbol. What we are seeing now, we've seen some good buying, but volumes are pretty light. I would say that 2500 is holding, which is a good sign. Now, are we going to see the market passing 700? Probably not. And if it does, it will bump on 2800, 2810. If we now look at the various patterns, this pattern is, okay, let's go for this. This one pointed to 2600. The next one is much lower, just below, about 2250. This one, okay, I'm going to delete it for now for clarity. So we've got a second expansion pattern here. This one was pointing to 2476 and the next one is again in the 22 area. I don't see, but you know, the market can be surprising. I don't see right now the market going all the way down. It will still try to hold this strong 2500 support, and I would suspect that it will be very volatile in that range. And let's look at this range. It's 2500 to 2700. It's already 200 points. The market can easily move 200 points in a day. If you look at this overnight low on Friday, just below 2400, and it hit 2700, it was a 300 point range for that Friday only. So the test level will be 2700. There may be some residual momentum to go and get there, in which case we may have, like we had a penetration below 2500, we may have a penetration all the way to 2810, but that's definitely not the favorite scenario. We are maybe, let's look whether we are getting into some form of a channel, and for that we would see, say, around here, and let's clone it here. Yes, if we can take this channel seriously, there may be a breakout effect and maybe it will go all the way up to 2800. I would suspect that we will see, maybe let's have a look at a short time frame for now. So in a shorter time frame, we may see this gray line acting as a pivot between 2500 and 2800. So what we could see instead is, let's say, line here on the gray, clone it. Okay. The most likely scenario if there's any stabilization would be that the market will try and stay there. But let's not forget that if this channel is true, and that remains to be confirmed, it is likely that the market will try at the end of this pennant to go down. We may have all the way to the March expiration, let's say 17. Let's give us 2 or 3 days max to see the market possibly going to try and lower. I would say that if the market bounces, of course, and if it goes all the way to 2800, we will see a wider range. This will probably stay a pivot, and the market will then hover either in this range, 2650 to 2800, or lower, and most likely lower. Now, as I said last week, when the volatility is so strong, it's good to have a look at a longer time frame. And here we see that there is still quite a lot of bearish pressure. This pattern is still quite valid. It was just about 3400, a low on 2845. So we get back to what I said before. If 2500, it will probably aim for 2250, this area. The levels are still valid. The range has expanded, and if you follow this, I mentioned a few times that the markets tend, even though it's noisy and volatile, tends to try and find equilibrium prices on multiples, which are somewhere around the gap between those lines. Here, if you look at this one, 2810 to 2970, that's 160. Previously it was 40, so let's say it's a 40 or multiple of 40, but now it's probably 80 or 160. So now if we look at the 2500, and if I go down to 22, let's say 2260, that would be 240 points, so it would be a multiple of 6. Let's see how it goes. Again, I will still, at least in the beginning, at least for the early in the week, I will still assume that 2500 will hold. Of course, here have market dropping. If we look at these lines, it is 2500 here as well. On a daily chart, 2500 is still the level to monitor. So we will assume that 3500 will hold, and we will have a period of congestion like we had here when the market almost hit the 2820 there. It was 28.45. There was still some bullish resilience, so the market didn't really hit the 28.10, 28.20 to bounce back. Now it is there. It has already penetrated pretty big. We may have some volatility, some penetration, but overall, probably for, let's say, 3-4 days, and that could also be, it is rollover time. The March expiration is a quarterly expiration. It's actually a very important one. Some rollover activity will be all the way to June, especially in this time of high volatility. The rest will be to April. So there will be possibly some short-term volatility dropping a bit, which is good for short-dated expiration actually, and it will be rolled over, so pushed forward to June. Let's go back to the 4-hour chart. That one gives us about 2-3 days view. On this one, we will check this channel again. We'll check whether 28 can be attained. I don't think so, or maybe very briefly, and I would assume that 2500 to 2700 will be the range to monitor and protect if, like me, you are a market neutral kind of trader. Okay, that's it for now. As you can see, there's a signal here that looks pretty strong. So I would say on Monday, probably some leftover, and then wide gyration 2500 to 2800. That's 300 points. Okay, thank you for watching. There may be an update on Monday morning because this time I recorded on a Saturday morning before the futures reopen tomorrow night. So there may be more surprises coming. Enjoy the weekend, and bye for now.